Welcome to Mirae Asset Sharekhan's quarterly expert review, sector updates, where we decode earnings, trends, and opportunities for today's smart Indian investor. Let's break down what the latest numbers really mean for a portfolio. If you're watching this, chances are you've got some money in IT sectors or you're thinking about it. If yes, you might want to stick around. Today, we are diving deep into IT sector's latest earnings, and trust me, there's some stuff here you need to know about. In this video, I'll quickly break down how the sector performed, what's improving, next in week, and our preferred picks in the IT space. Before we dive into the numbers, let's quickly understand two nuances: Tier 1 companies and Tier 2 companies. Tier 1 IT companies are usually TCS, Infosys, Wipro, HCL Tech. These are giants with revenues in the tens of billions of dollars. Think of them as a massive cruise ship. Tier 2 IT companies like Coforge, Persistent Systems, and LTIM are mid-sized players, smaller but more agile. Here's the key insight: when you're already a 25 billion company, growing by even 5% means adding over $1 billion in revenue. That's incredibly difficult. But when you're a 2 billion company, growing by 20% is more achievable. Even though in absolute terms, it's only $400 million. So where do you get with each? Lower IT companies means lower growth percentages but rock solid stability and predictability, perfect for long-term investors. Tier 2 means higher growth percentage but can be very volatile. They are nimble, hungry, and can pivot quickly to grab opportunities. Quick explainer: that's constant currency. Indian IT companies earn in dollars, euros, Japanese yen. When the rupee weakens, the same dollar revenue looks like more rupees. But that's not the real growth, just currency effect. Quick example: company earns $100 million both quarters, but if goes from 82 to 84, revenue looks like it grew from 8,200 crore to 8,400 crore. It's just currency magic. Constant currency removes this trick and shows actual business growth. Okay, so here's the deal with IT sector this quarter. It's not all bad news, but it's not fireworks either. But the catch is they posted better results than what the street was anticipating. Tier 1 firms posted modest growth ranging from -3% to +5%. Not thrilling but steady. Tier 2 firms showed explosive growth up to 25% by aggressively targeting hot sectors like BFSI, healthcare. Understanding the Tier 1 performance, HCL Tech posted 4.6% constant currency growth, Infosys posted 2.9%, Mahindra was flat, Wipro was -2%, and TCS was -3.3%. Among Tier 2, Coforge posted 5.9% sequential growth in constant currency, Persistent posted 4.4% sequentially, LTIM posted 2.4%. These numbers are really impressive. Tier 2 companies are capitalizing strong demand across BFSI, travel, healthcare. Where is money being spent by all the IT companies? Companies are still spending on technologies in BFSI sector, it is banking, finance, and insurance, as well as utilities. But industries like telecom, retail, auto, and energy, they've been holding back on big tech projects due to global slowdown. Now we'll talk about guidance. So here's where it gets interesting. Several big players just upgraded their layer end of the guidance. HCL Tech is now expecting 4 to 5% growth, Infosys is expecting 2 to 3%, and Wipro is projecting -0.5 to +0.5. Companies don't upgrade predictions randomly. When they raise their forecast, it signals that the things are stabilizing. We're not talking about a sudden boom here. But the important point is, conditions aren't as bad as they were a few quarters ago. Think of it as the clouds starting to clear. Not sunny skies yet, but definitely better visibility ahead. This cautiously optimistic shift in guidance suggests that the sector is moving in the right direction, slowly, steadily, but surely. These IT giants work across banking, healthcare, finance, and mere so their improving outlook reflects a gradual return of business confidence. Now we'll talk about deal wins. We have talked about revenue and forecast, but here's the key metric that truly excites investors and analysts: deal wins. Think of deal wins as new contracts these companies are signing with the clients. It's basically a measure of how much new business they are getting in and bringing in. And folks, the numbers are really quite impressive. They're the big players secured: TCS +16%, Infosys 28%, Tech Mahindra 35%, Wipro a whipping 19%, HCL Tech 15.8%. Among Tier 2, Persistent recorded 15% growth, Coforge 25% growth. Now you might be thinking, if they're winning so many deals, why isn't the revenue growth matching? Great question. Here's the thing: deals signed today don't always translate to revenue immediately. There's usually a lag. Projects need to kick off, teams need to be deployed, work needs to be executed. So these deal wins are essentially future revenue in the pipeline. What kind of deals are these? three main types are dominating. Cost takeout deals. Companies hire IT firms to help them cut costs and run operations more effectively. Vendor consolidation. Clients reducing the number of IT vendors they work with and giving more business to fewer trusted partners. AI-led deals, the hot topic. Companies investing in AI and automation projects. The bottom line, strong deals today, healthier revenue tomorrow. This is genuinely encouraging because it shows client confidence is returning and budgets are being unlocked, even if gradually. Now we'll talk about valuations and outlook. Things do look better ahead. Over the last year, Nifty IT fell close to 12%, while Nifty 50 gained 12%. This underperformance came from weak discretionary spending and global headwinds in manufacturing, retail, and telecom. But now, the forward setup seems stronger. Deal pipelines are healthy, large deals are picking up, and AI native workloads should become a real revenue driver from FY27 onwards. Current valuations are already pricing in a very pessimistic view, so further downside looks limited. We need to maintain a positive stance on the IT sector for the medium to long term. So that's your complete and simple breakdown of Q2 FY26 IT sector. Please check out our full report from the description as well as an in-depth analysis if you enjoyed this easy to understand update. Don't forget to like the video, share it with someone who follows the market, and subscribe for more such sector updates. Thank you for watching it and see you on the next one.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.